Hey traders and investors, it's Serge Berger here. What I want to talk about today is the opportunities that I'm currently seeing in the transportation sector with the transportation group of the U.S. stock market. So, first of all, just to get a bit of an idea, let's have a look at the IYT, which is the ETF, um, uh, the iShares ETF that represents this group of stocks. And you can see basically what the ETF is doing is forming what I think is an interesting and tight patterns. And tight patterns really is where, for the most part, in terms of directional trading, you want to focus your attention on. You can see here on the 5th of February we had a long tail doji candle followed by follow through buying, and all this has now moved this ETF into this lateral resistance area. So that's an important thing to note for one, and of course, if and when we were to break past this resistance area, which we marginally already did last Friday, I do think this could really open up and move this ETF into the mid 130s or so. However, if I look at some of the components the transportation ETF, I don't see a ton of stocks that look really, really juicy in terms of tight patterns to buy. For example, so here's UNP. This is Union Pacific Corp. This is the largest holding, currently around a little more than 14%. That the ETF has, and you can see, I mean, this is a very nice uptrend, but there's really no tight pattern here that really can lead to any explosive moves, at least not in a higher probability fashion. So there's a whole bunch of those kind of stocks in this ETF, and those are certainly not the ones I want to focus on. The ones I want to focus on are three of them. First of all, FedEx. Okay, FDX has been one heck of a stock over the past years, and it has now given us a pretty good dip over the past few weeks, and now a consolidation phase. So the stock has a very defined and tight level of resistance where we can focus around. So if this stock were to break, let's call it roughly around past 134.50, 135, maybe it really has a much better chance of working towards this 50-day moving average and then back above. So that's one stock that I like in terms of its tight pattern, because again, it can lead to more explosive moves. Then there's Ryder Systems, ticker symbol R. Quite similar to the price action here. You can see we held, or the Ryder stock held the 200-day moving average, the 100-day moving average, sorry, which is the blue line here on the 4th of February. Give us follow through buying a couple days later, and now we're at this resistance area. Push past, let's say, $172, again, could move this stock towards well into the mid 70s. And then last but not least, the airlines, of course, have been a good story for quite some time now, and a lot of them look very extended, but Southwest Airlines, ticker symbol LUV, is giving us an increasingly tightening pattern here, which, if we just kind of draw it, very loosely, you can see we have a resistance area just around $21.50 roughly. A push back above there could really get the stock moving again well into the let's call it the $23 area. So I hope this makes sense. Any questions, as always, tweet me at the handle SteadyTrader. Take care.